first entry here, how did we journalize sales? Where do we debit? What do we credit then? We definitely have accounts receivable, since this is a credit sales. That's why we're doing accounts receivable and collectibles. And then the right-hand side, we would be crediting sales revenue. Okay? So remember, normally this is introduced in Chapter 5. Normally sales has two transactions, one also on cost of goods sold, one on inventory. And here this problem, for simplicity purposes, it didn't tell you what is cost of goods sold. It just submit this entry. Okay? Now in this second entry here, so lower that down. Okay. Second entry, after sales, second entry, we want to estimate uncollectibles based on 2% of the total sales transaction, which is $322,000. We use $322,000 credit sales times 2% of uncollectibles expected amount. Okay, so this will give you $6,440. And we capture this estimation based on the two accounts there, uncollectible account expense. You see this reported as $6,440, and allowances for uncollectible accounts credited $6,440.
Can you go back one? I'm sorry.
Go back to the problem side?
Yeah.
Sure.
Shouldn't you use 36,000 because that's the balance total?
$36,000 is the balance, meaning at the end, when it gets to December 31st, this balance here is just the balance on this time point, but it doesn't mean all throughout the year the total of accounts receivable. So the total credit sales, this method here is called percent of sales, right? So we're using the total credit sales times 2%. So this here, early on, we must have had many different transactions, and some of them was paid off by clients, and then later on, this is the balance that's left. Okay, so you then have January, February, March transactions, and then some of the customers did pay on time, so you credit this. So this is the overall balance that's still left, and you'll be receiving payment next year. Okay? The percent of sales method, when we talked about this earlier, is that we're using the total dollar amount of sales that actually happened. So it's adding up all throughout 12 months, the total credit sales amount. Okay, so this transaction, this example here, you have this $3,000 balance there. That's the ending balance after some of the clients paid off their, made the payment for accounts receivables. So the $15,000 is the total credit sales amount. Okay, so we'll be doing the estimation based upon total amount of credit sales. Okay, keep in mind that accounts receivable balance will be constantly changing as some of the customer pays off their money. So for example, in January 1st transaction, oftentimes the majority of the customer will pay that money off before February kicks in. February's transaction, a lot of the clients will pay off the money before March. Okay, March, they'll pay it off before April. So this really oftentimes relates to only the November or December transactions. Okay, okay, so this part when we do estimation, we're estimating a whole year of time, just in case. So just in case earlier there's some of the transaction, the customer really delayed the payment. Up to the point of December 31st, you still didn't receive the payment from them. So this is a total allowance pool, the estimation part that we do estimation based on the total sales transactions happened this year. Just to be on the safe side, we report it as uncollectibles before it actually is deemed as uncollectibles. And this also goes back to the conservatism principle, meaning that we never want to make allow creditors or investors to think we have too much of an asset or too much revenue, because that is very dangerous when later on that didn't turn out to be the actual case. So to be more conservative, or maybe think it's a little pessimistic, we always want to estimate the part of expenses and liability that will likely occur. So this is what this transaction means. Okay, so after this measurement here, at the end, what you would see on balance sheet, you would have accounts receivable listed $36,000, and you have have the contra account 6,440, it will be listed like this for accounts receivable section. Yeah, at the end you have a net realizable value of 29,560, which is really the amount that we're expecting to get on time. Okay, this part we estimate a pool up front. Assume that this part may likely not be received. Any other questions so far? All right, so far we really just introduced one entry, the debit uncollectible account expense and credit allowances for uncollectible account. Okay, this is the first. Before we decide which are the customers that really has a payment that's due that they haven't actually paid on time, this is an estimation.